in terms of happy, there hasn't been a lot of happy. As a matter of fact, last time you were here, your survey really did quite well at predicting there was a certain type of agita that was going to show up, and it showed up in double heaps. What does it look like this quarter?
Sure. Well, investors are expecting generally in line with consensus earnings, but nearly 60% are expecting downbeat outlooks relative to 2018. Remember, 2018 was a high watermark. So I would characterize sentiment as certainly chilling, but not freezing.
Now, when it comes to guidance, most companies and most investors obviously have shown us a little darker glimpse of the future, but a full 58% think guidance is going to be weaker in your survey. Did that shock you?
No, it doesn't. I mean, we are seeing signs of slowing global growth. Higher input costs, interest rates, the tariffs, these are all coming to fruition, just as we said last quarter.
Those were all issues last time. So the fact that they haven't been resolved, and in terms of interest rates, I don't know how corporations could understand where they're going to go if the Federal Reserve is flexible and undecided, because it's not sure how the economy is going to accept recalibration.
Sure, but on top of those now, when we have a period of uncertainty and the headlines are saying recession, which really have been exacerbated in December, companies, big, small businesses are really closing the purse strings on CapEx. They don't want to be spending at the peak of the cycle. And by the way, 40% of investors that we survey think that we already peaked.
Now, when it comes to fears and optimism, both extremes in the survey, give me what investors in your survey are most afraid of, and give me what you think is the most optimistic areas.
Sure. Well, optimism is in healthcare, technology still to some extent, buildings products saw a massive sell-off. So they're really flocking to defensive plays. And we're also seeing 87% are placing more emphasis on balance sheet strength. 85% are looking for companies with strong operating muscles.
Hence, we've seen so little in the form of issuance, especially high yield. That would flow right into that. What's the biggest fear right now?
The biggest fear is, I think, coming to, their fears around global growth actually coming to fruition. And that is why guidance and the earnings is going to be a massive amount of information that they're going to be looking at. And, executives should be talking about risk adjusting strategies. They should be talking about how they've been paying down debt. If you're going to be talking about growth, and there are still companies that are seeing growth, they're not seeing a massive sell-off. They're seeing deceleration to some extent.
We're almost out of time, but based on everything you've compiled, what would you tell an investor watching in a couple of sentences as to how they should invest with the questions that you've risen?
I would be looking for companies that have cycle-tested management teams, that have been able to move with agility in terms of cost-cutting and positioning the company for both good and bad times, because quite frankly, we're moving into worse times than we've been in.